Hello, wonderful person. This is Chris for the Informed Stoner. It is Monday, time for our midday news report. Before we get started, if you could please like and subscribe, that would really help us out and I'd appreciate it. From NBC News, is Silicon Valley Bank getting a government bailout? Not in the 2008 sense. Federal officials insisted their emergency measures to shore up deposits wouldn't come at taxpayers' expenses, but the public could still bear indirect costs, one expert warned. Okay, so if they're shoring up these accounts, how is it not going to affect taxpayers? If it's federal funds, it's still got to affect us somehow, even if it's just an inflation from printing more money. I don't know if I'm wrong about this. Let me know in the comments. What do you guys know about this? Fill me in. Washington officials have announced they're guaranteeing all deposits at Silicon Valley Bank. Now, to guarantee all deposits at this bank, that's covering anything over 250,000, which from what I understand, there were tons that were millions and millions and millions of dollars uninsured in this bank. It's nuts. The tech-focused lender that federal authorities shut down Friday in one of the biggest bank collapses in years. Yeah, and I'm hoping it's not going to lead to more, although they said that they're going to fully guarantee all deposits in all banks. So, I mean, it's nuts because that's just going to give banks the ability to just ham it up. You know what I mean? I hope I'm wrong on this, but we'll see. In a joint statement Sunday, the U.S. Treasury and Federal Reserve and Federal Deposit Insurance Corporation said that the extraordinary measures that were taken to shore up SVB's deposits would not come at taxpayers' expenses. Again, I'm not sure how this is going to happen when it's coming from the Federal Reserve and the U.S. Treasury. How is it not going to affect taxpayers? I don't get it. I think they're full of it. Asked if agency's actions consisted of bailout, a senior Treasury official emphasized the point Sunday night. The government also reiterated that only SVB depositors, as well as those at New York-based Signature Bank, a secondary institution, took over and shut down, would be made whole. That's nuts. That's nuts. Shareholders of the failed banks, as well as some bondholders, will not be protected by the actions, the agency statement noted. Instead, the cost of covering the deposits, including uninsured amounts in excess of the FDIC's $250,000, which, that's a lot of money for people, but for, I get it. For a corporation, for a business, that's nothing. You can't even cover your payroll expenses with that. I get that. But us covering all those millions, well, I think it was like 200 and some billion in total. It's nuts. It's just a lot more money that I don't know how it's not going to affect the taxpayers. Will be paid for in part of the agency's deposits insurance fund, a reserve that is paid for on a quarterly fee on banks. Okay. So they're going to pay for it in part from the agency. Oh, in part out of the agency's deposit insurance fund. Okay, so how big is that part going to be of the 200 billion? How much do they have in this fund? It's just, I don't know. It doesn't make sense. Let me be clear that during the financial crisis, there were investors and their owns of systematic large banks that were bailed out, and the reforms that have been put in place means that they were not going to do that again. Treasury Secretary Janet Yellen told CBS Face the Nation earlier Sunday, before the emergency measures were announced. But we are concerned about depositors and are focused on trying to meet their needs, she said. Funding for the emergency measures will also come off to selling the SVB's assets. According to Morgan Ricks, a banking professor at Vanderbilt Law School, as a result, he said taxpayers' dollars won't be directly impacted in the backstop measure. We'll see. That is a key difference from the congressionally approved bailout of the American financial authorities approved in fall of 2008. The legislation called the Emergency Economic Stabilization Act and marked $700 billion to create the Troubled Assets Relief Program to purchase toxic assets from banks. By designating their backstop measures as a systematic risk exception event, Washington's regulators sidestepped a vote that would otherwise be required for Congress on whether to backstop the bank's depositors. So in other words, they bypass Congress with this, and whatever happens to it, no one was able to vote on. No one. It's BS, if you ask me. I don't know. It's nuts. The exception, designated required designation required the approval of 2/3 of the Federal Reserve Board of Governors, 2/3 of the board of the Federal Deposit Insurance Corporation, and the Treasury Department in consultation with the president, according to Ricks. Okay, the only person in there that is an elected official is the president. And the president is not supposed to have monetary control. You know, the House and the Congress does all that stuff. It just doesn't sound good to me. I don't know. Maybe I'm wrong. Maybe I'm being hyperbolic. I don't know. But it just doesn't feel good. The agency's joint statement Sunday notes that any losses ultimately incurred by the deposit's insurance funds to support depositors will be recovered by ongoing fees on banks. Assuming there are losses, Rick said, the cost of the guarantee of all depositors will be borne by banking customers. In other words, the wider public. In such a scenario, he said, part of it should be expected to fall on the bank customers indirectly. Well, these people should have had their money a bit more insured, maybe use more than one bank, get multiple accounts. There's got to be other ways to do it. The deposit insurance funds balance was $128.2 billion as of December 31st, 2022. Okay, so they're still short like $80 billion-ish, give or take. According to the filings, 89% of SVB's $175 billion in deposits, or approximately $156 billion, were uninsured. Okay, I had heard more than that, so maybe it is only $175 billion. But still, they're still short quite a bit of money right there. Rick says that in no way of knowing yet how much the federal backstop measure will ultimately cost, adding that it would depend in part on how many regulators can recover from selling the bank's assets. It's entirely possible it will cost zero, Rick said, meaning it's entirely possible the recovery from selling the failed bank's assets will be enough to cover the insured and uninsured deposits. Time will tell whether this bears out. Oh, bull crap. Don't give me that crap. They do not have $175 billion in assets. They don't. They don't have that much property. They don't have that much office space. They don't have that much furniture in their damn offices or computers or other crap. Don't give me that. Anyways, this is nuts. Oh, let me know what you guys think, Leave a comment below. Do you think we should be bailing this thing out again, even though we're not technically bailing them out? Or, should these depositors be liable for their own deposits and knowing that anything over $250,000 isn't FDIC insured, what do you guys think, Come on, leave me some comments. Let's talk about this. Anyhow, y'all have a great rest of your day. Take care.